Hi guys, and welcome to our video for today for the 9th of August 2026. So this is our second video for today. Hopefully you've just seen the other one, SOAR, looking for day trades for Monday, pre-market open and market open, so don't miss that one. Also potential, what we need to hold overnight for potential swing trades as well on SOAR. And we're going to be doing the exact same thing here on HUDI. So I'm going to look at the 5-minute time frame for day trades for pre-market open and market open on Monday, so 9:30 a.m. Eastern Time or 4:30 a.m. Eastern Time, as well as the 4-hour time frame for when we need to hold the stock overnight, HUDI, into Tuesday, and also potential swing trades so we can hold it for longer than just overnight and into the remainder of the week and potentially the week after that. So yeah, let's start with the 5-minute time frame on this one. So yeah, I mean, we're going to start by drawing my favorite continuation pattern, falling wedge, mark from the wick over here, and get all the bodies in the wedge like that. And yeah, it's a bullish pattern on this one. However, there's a couple of things I don't really like about this stock right now. I think this one's more likely to come down than SOAR, and that's because when I turn off my drawings, it's more clear to see. We're getting rejected from this orange line, so we lost it around here, around 6:55 p.m. Eastern Time. Tried to reclaim it, and then we had a rejection from this orange line clearly, and with the last candle at 8 p.m. Eastern Time. And this orange line is called the Bollinger Band Center, and when we're beneath it, we're 65% more likely to remain beneath it. When we're above it, we're 65% more likely to remain above it. So for me, it's a line in the sand of the chart, and currently we're again rejected from it, which isn't good, and it's basically squeezing between this orange line here and then the Bollinger Band Center, and this thick yellow line here, which is typically how moving averages can work. It can sort of like price can squeeze in between the squiggly lines we call as moving averages. So we've got the Bollinger Band Center here and the 60 EMA here, and price is sort of squeezing in between the orange line and the yellow line here at the minute. And I'm going to turn my drawings back on. If we were to lose this yellow line here, 60 EMA, it would be a failed golden cross retest, and it should drop down even further. So that's just what I see as, and I'm just going to remove this falling wedge for now. I'm just going to explain what I see right now, because it gives me an idea of what I think the stock might do. And also I did see a bearish head and shoulders. So your left shoulder's here, your head is here, and then when I turn my indicators off to make it easier to see, you can see the right shoulder is here, and this is the bearish pattern. Head and shoulders is typically bearish. Inverted head and shoulders, which is the head and shoulders upside down, which you can learn more about in our week 3 seminar. Check us out, link in the video description. Is more bullish, the inverted head and shoulders. So the bearish one is the head and shoulders, as we see here. So obviously getting rejected from the Bollinger Band Center, bearish head and shoulders there. So it gives me an idea that this stock is weak when it was curating price action for the last hour or so of after hours on Friday, but it doesn't change our setup or criteria for entry. Just gives an idea of what our expectations are for the stock. Just add some more knowledge to us. That's all it is, because your strategy and what you think is going to happen are two different things. So our strategy is to wait for a falling wedge breakout against the one-day resistance, which is 1.1, which we'll talk about later. But we wait for that to happen, but we're going to wait obviously to see what happens. And but what I think personally is that we've got the bearish head and shoulders, and we're rejecting from the Bollinger Band Center, so we're probably going to come down and not break 1.1. But what you think and what you need to happen are two different things. So I think that might happen, but who knows? This stock could just bounce up and break 1.1, and then I'm not thrown off by that because I'm just waiting for my criteria for entry. I'm not confusing the two. Like I said, you think what can happen over here, and you separate it from what you're waiting to happen for over here. It's just to help read the chart, read the stock, and maybe prioritize other things as well. So yeah, I mean, we've got the 60 EMA here around 0.95 to $1 is acting as a level of support, which is a psychological number, which obviously lots of buyers are going to step in around there, and it's sure to be a price target for the insiders in the stock, etc. And for an entry on this one, I'd be waiting for a 1-minute criminal close or a 2-3% push over 1.1, and I expect it to run at least 10% for my entry. So again, I'll be waiting for that 1.1 break, and I expect it to run at least 10% for my entry, and ultimately hit 1.3 as a main target. So around 10-15% from entry on this one once it breaks over 1.1. However, if I was in this, if you were to lose 0.93, the bottom of these two tweezers, well, not tweezer bottoms, but the two candles here, you see these here? I would expect this to be done, because you're not only losing the 60 EMA, you're not losing the bottom of the Bollinger Band, you're also losing where it's added as support here, 0.93. So you're losing the 60 EMA, bottom of the Bollinger Band, which is both bearish, and then strike 3, losing the bottom of where price previously bounced from. So 3 strikes and you're out, and that'd be me cutting the trade if I was in this. So beneath 0.93, I wouldn't want to be in this. Definitely for a day trade, swing trade, holding it overnight, it's just not for me. If it were to break 0.93, which isn't too far from where we are right now. I guess that's like 10%, is it? Oh no, even less. So 8% stop loss around there. So that's quite good actually in terms of risk to reward. Because if we do break that, we're coming down to 0.85 to test the next level of support and also the 200 exponential moving average for another further deepened golden cross retest. So again, if we lose 0.93, this one is done for now. And then if it does bring itself back up and break 1.1, we can just enter again with having minimized losses, and then look for a profit greater than our loss. So yeah, again, if you're in this, I'll just wait until 1.1 or 9. I'll just wait for 0.93 to lose, to be lost, to quit it. Or if we're looking break 1.1, you can take some profit around 1.2 to 1.3, be a take profit area on this. Just around 10-15% sort of play out on that one. So that's for a day trade. So again, write that down so don't forget. And that's because the top of the wedge is structurally the first target. So I'll just mark it here. You can see that's the top of the wedge. And also you can see that's where we've never had a candle body closure above. Just want to turn my indicators off. You can see never had a candle body closure above here, only a wick above, and also the same here. So it is a resistance. It rejects from there historically with a double top, as you can see here. So 1.2 to 1.3, obviously 1.2 being this purple line where I've just explained as a resistance, and 1.3, the next horizontal one-day resistance, is ultimately a take profit area. So yeah, that's where your take profit would be on these for a day trade, as well as obviously looking at an adverse effect. So let's go for the 0.93 loss. So let's go to the 4-hour time frame, see what we need to hold this stock overnight. So I'm going to turn my indicators on and just talk about what I can see. This one looks good. I think this one, based off the 4-hour, this one should continue next week. So we had a 4-hour green candle close over 0.85. Broke beyond and closed upon the 200 EMA and 200 MA, these two thick wire lines here. And yeah, I mean, I would just expect another candle body to do this. We've already hit 1.3. But I think that should happen again, to be honest. I think this one will hit 1.3 at some point again this week coming up between the 10th and 14th. So the 4-hour looks really good. So that's what I'm seeing right now. But obviously looking for an entry on this, I'll just wait again for that 1.1 break. So I'd wait for the 1.1 break and then be sure to enter and then sell around 1.2 to 1.3. And then maybe we can look on the daily time frame for a larger play on this. But I think this one will continue and hit 1.3 at some point next week. Definitely. Just remember, if we lose 0.93, I would consider it done. So the daily time frame, where are we? Right then. So, okay, so obviously the 4-hour candle close or 5-minute close above 1.1 will see us hit 1.3. If I was looking to swing this, I'll just wait for a 1-day candle close over 1.3. So long-term play, daily candle close like this over 1.3, like that, because it's the next resistance and it needs to be broken and engulfed upon. And we also have the 200 EMA and 200 MA acting as resistances here, which is your death cross, and let me check, yeah, it's definitely a death cross, and only strengthening the resistance of around 1.1 to 1.15. So I wouldn't really wait for the 1.1 break because it's got resistance around 1.15 where the death cross is. So we need to get above all this confluence of resistance here, and that'll be done with an engulfing candle beyond 1.3. And once we do get a daily candle close over 1.3, our next target would be 1.65. So again, you can get 10-15% out of a day trade from this, or just very, very short-term swing trade if we do get beyond 1.1 and hit that 1.2, 1.3 level. And then we can hold it for a potential swing trade over a series of days if we have a daily candle close over 1.3, because 1.6 to 1.65 will hit next for a 20-25% move. So you get your 10-15% firstly from the day trade or the 4-hour time frame. So that's 10-15%. Then we get another 20-25% from the swing trade as well on the daily time frame. So what's that? Around 30. So 10 add 20 equals 30. So that's from the lower part of the day trade and swing trade together. And then also 15 plus 25 is 40. It's around 30 to 40% combined when combining a day trade and a swing trade together. So we can get around 30 to 40% out of this stock if it runs our way on this one, HUDI. But remember, guys, you have to wait for the criteria for entry. Like, I think personally it's gonna reject and come down based off what I see. but I'm still going to be on guard for this and respect my strategy and my trading plan because it's the only thing that pays me back. They say life pays you back. That is true, but what's more important and more true to trading is that your trading plan is the only thing that pays you back too. So yeah, I'll be waiting for that to happen. So again, we're beneath 0.93, no good, no bueno, and above 1.1 we hit 1.3, and then once we get above 1.3 we hit 1.65, etc. So yeah, that's the play. Day trade, swing trade, holding it overnight, etc. And when I say hold it overnight, we need that to happen on a 4-hour time frame by 4 p.m. Eastern time on Monday. Okay, 4-hour green candle close by 4 p.m. Eastern time Monday. So that's the plan of action, guys. HUDI. Keep it on watch. I personally prefer SOAR, so go and check that video out so you can trade it with us. So thanks, guys, and catch you all later.